Ajay, hi, morning. Good to have you on the show. You've regained your export growth, which clearly has managed to drive your revenues and margins. How would you describe the quarter gone by, and more importantly, with these growth levels really sustained?
Hi, good morning. Yes, I think for the quarter, our exports were year-on-year up 18%, but overall for the quarter, our revenues declined about 11%, while the domestic revenue was down 22%. Exports kind of held up strong and increased by 18%. And I think from a bottom line standpoint, our PBIT margin did expand by 10 basis points. So we do believe that from a quarter perspective, exports kind of held up strongly compared to our domestic business.
Sure. How's competition faring up when it comes to the high HP segments? And do you see traction on the back of data centers picking up over the medium term?
I think the high horsepower segment in our power gen business is generally limited with fairly few players there. And I think we continue to have a leadership position in that segment, primarily driven by a very robust technology that we offer in that segment. You talked about data centers. I think that is one area, segment from an end market perspective where we have seen the demand kind of held up. Most of the projects that were lined up, those are getting executed. So we feel pretty good about the data center growth kind of holding up as we look at current quarter as well as the future quarters.
What about railways, construction, those segments, and the outlook as well? Both in terms of how you're already seeing traction and what it's looking like, let's say, over the next couple of years.
Yeah, so what we call, if you look at our business, we look at our business in 4 segments, which is power generation, industrial, distribution, and exports. So within the industrial business, we have a further sub-segments as we track them. And railways, of course, is one of the key segments for us, for our industrial business. What we have seen for railways is that because of the lockdown, the railway services aren't yet up and running fully. That is number one. Number two, from a government standpoint, I think there is a stated goal of completing the electrification of the national railway system, and which would mean that all that needs to be done from a track and electrification point of view. Those investments we do see being holding up. Number three is from a government standpoint. I think to some extent the power car segment is where we have seen some impact because the railways have stopped the power car procurement. However, we had been nurturing the railway segment for a long time. So we have multiple other applications where we do see a steady demand from the railways. Talking about some of the other industrial segments, whether it is construction or mining, we do see mining kind of holding steady with respect to all the investment programs, as well as some of the auctions that are being planned for the coal. And within the construction segment, we do see the projects revival happening, especially as the government continues to focus on the infrastructure development. We do believe that the construction segment would have a gradual recovery starting with current quarter and then going on into the quarter 4 and then in 21, 22.
Okay. On the export market, how's the competitive intensity shaping up? Do you feel we've bottomed out? What's the sense that you're getting there?
So for exports, when you look at our quarter 2, where we had 18% growth, we believed a large part of that growth came primarily because there was a pent-up demand because of what happened due to the impact of COVID-19 across the world. From an end market perspective, also we do see telecom, health services are the really end markets which are driving the growth. On the competition intensity, I think it's kind of regional when you look at it. We do see the competition increasing because now that the volumes are relatively lesser compared to prior years, and the competition intensity is more because everyone is trying to win as much volume as possible. However, from our standpoint, clearly the kind of distribution reach that we have, clearly the kind of product and the brand promise that we have, we do believe that we are in a strong position to continue to hold our market share on the export side, and also try and find ways in which we can expand it.
Sure. The domestic business for you has managed to recover a good 80% off the last year levels, led by distribution, construction, as well as the mining segments. Do you sense that we can see further traction in the domestic business owing to the gradual opening up of the economy? And if you have any guidance in that sense that you could give us?
Absolutely. I think we feel pretty positive that on a sequential basis, the domestic demand will certainly revive. Certainly when you see the end segments, we talked about data center, we talked about healthcare. We also see that the other segments, like for example, construction, real estate, those segments, we do see that the projects are getting executed. We haven't seen cancellation of significant volume of any orders. So which would mean that the customers who are committed to completing ongoing projects, we do see those projects going forward, number one. Number two, from an industrial standpoint, certainly we feel that as the economy picks up, our industrial demand primarily into the off-highway segment from a construction equipment perspective, we do see that coming up. As I monitor the monthly action on these particular end markets, I'm seeing on a sequential basis, the demand is picking up in these segments. And I do believe that, to the extent the volumes are playing up, we are on our way to sort of get to recovering to pre-COVID levels, maybe in 2 or 3 quarters from now.
All right, Ajay, appreciate your time and thank you for joining us.